To keep things running on a short-term basis is simple. They just have to provide the liquidity. They don't have to really buy assets. These are loans. They're not taking the toxic assets off of anyone's balance sheets. Now, they'll eventually probably have to do that as part and parcel of their intervention. So I think this just is an indication of how sick this system is. But when people look at it in a vacuum and they try to analyze it, means something, and it just means the entire system is broken. This is a financial system issue, not an economic issue.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. We are committed to being your trusted source for low-cost, highest quality investment-grade bullion products. Visit SDBullion.com for more information.
Welcome to Silver Doctors. Today I'm excited to have returning guest, Mr. Louis Cammarosano, the creator of smallgold.com. Today he's joining us to share his thoughts on the global economy, political realm, and a variety of other matters. So Louis, welcome back to Silver Doctors.
Well, thanks for having me back on.
Well, I appreciate you taking time to sit down with us. Definitely looking forward to getting your thoughts on a variety of subject matter. You do a great job on your channel covering all these subject matters. So definitely looking forward to you having a chance to share it with the Silver Doctors audience. So before we get started, I'm curious to find out, what are some things that Louis Cammarosano is keeping an eye on these days?
I'm keeping an eye on, Mike, that there is no central bank out there, no politician of any major influence that is in any way, shape, or form concerned about printing money, lowering interest rates. In fact, we have Mario Draghi over at the ECB talking about modern monetary theory. We must look into this. We've got talking about helicopter money. We've got the Fed, even though they're pushing back on negative interest rates, they are talking about, and in their meetings, how many more assets they can buy. China is just in full print mode. Every country is figuring out what they can do to loosen policy. Trump is upset that we're not at zero or negative interest rates. He's talking about QE. So it's the whole race to the bottom. And now you're going to have Christine Lagarde come in after Mario Draghi. She's a big fan of all types of interventions. And Powell is probably the most prudent of all central bankers. And that's not saying much because he still wants to lower interest rates and look at what assets they might buy in the next downturn. No one is talking about any type of fiscal responsibility. Mario Draghi is complaining, and many central banks complain, that monetary policy can't do everything, that maybe we have to look at fiscal policy, and that could mean helicopter money, giving people $1,000, giving people more. Then on the far side, you've got people like Bernie Sanders saying, then the people shouldn't have to pay for anything. I mean, they don't want to pay for, and they want their debts absolved. So I'm not sure where this is all headed, but that's what I'm keeping an eye on. I think all of that is bad news for the economy, but the good news is it is good for precious metals.
So you gave off a variety of things there. So I want to go back to the very beginning where you talked about central banks race to the bottom. And so we know that ever since the great financial crisis, it's always been that narrative of economic expansion, recovery. And so the new norm appears to be this race to the bottom with the printing of currencies and continued increase in debt. And that's just on the monetary side of things. And so out in the public, amongst your normal consumer, all-time highs in debts and all types of things of that nature. At what point will the American public begin realizing that a lot of their problems are related to these monetary policies as well as a fiscal responsibility as well?
It's not going to happen. Unfortunately, if it hasn't happened the first time back in 2008, 2009, it's not going to happen because not only do they control the monetary policy, the fiscal policy, they control everything. They control the narrative. And essentially what you have is them, they can always find something or someone to blame. And then all you're going to get at that point is you get the type of rabble-rousing on the side that just says, okay, well, we've had all these issues, so we're going to have to make everyone whole. And that's what people clamor for. Hey, if you screwed up, well, then make it right. They don't look at the people who screwed it up to just step aside. They look to the people who screwed it up to fix it. And fixing it just means more of the same. Why don't we just forgive some debt? Why don't we hand out some money? Why don't we take interest rates lower? Why don't we have capital controls? Why don't, all the types of things that make it worse. So I don't think there's not, unfortunately, I don't think there's going to be any type of great awakening where people are going to understand cause and effect. I think they're just going to want themselves made whole, not understanding how we got there or what the unintended consequences are of trying to make people whole. Because an economy works on the basis of what value people have added to it, not how much the central banks can put into it. And I think that's a point that if you don't understand that by now, they assume that the way an economy works is how much fiscal or monetary policy is injected in terms of real billions of dollars into the system without really questioning where did they come up with the value in order to put that into the system. So when you put money into the system that didn't exist before and isn't based on any pre-existing work or value that's been added, then it's just incremental, it's inflationary. And it doesn't really help the economy. It only temporarily helps people who may need to increase the value of their 401ks, but it doesn't add any more value to the companies. So the company's valuation, the company doesn't do any better. Their stock price just goes up. And that's the same with all assets. The houses don't get any better looking. They don't become any more livable. They just get more expensive.
Injecting money into the system. And so this whole repo situation is well underway. And so we're several weeks into this, I guess, this new norm of trying to provide liquidity. What exactly is going on in your opinion, and where is this heading?
Okay, I think what's going on in this, again, also belies the fact that even people that are following it, I don't think understand what's going on. A lot of people are saying that this means we're going to have a recession. A lot of people say that this means the banks aren't adequately capitalized. Other people are saying that the banks are, the Fed is bailing out these banks and letting them bring whatever collateral they wish because they've got so much bad collateral. It's really none of the above. What it is, it comes down to that intervention begets intervention. And because the Fed has created, and central banks around the world have created an artificial system where they try to set rates, they try to move rates down where they want to, they have target rates, they have targets for everything. They don't allow the economy to go where it would naturally go. So you're in a situation now where they've created, they did QE, they added liquidity into the system. All countries then did QE after the US finished theirs. The Fed tried to pull the liquidity out of the system. They did it for a while. They raised rates. They tried to sell off some of their balance sheet. And now they're trying to get rates at, lower to 2%. What I think is happening is I don't think the banks are not adequately capitalized. I think because of things like Dodd-Frank and others, they have enough reserves. What they don't have enough are liquid reserves that they want to lend in the overnight market. And it's not because, I don't think it's because that the potential borrowers don't have good collateral to pick up. I'm sure they have it. It's just that the banks don't want to lend it. They don't have it to lend because they've loaded up their reserves. Remember, they're buying treasuries and longer term paper. And so the banks I think they're adequately capitalized, but they're not equipped to handle the liquidity that's required for the repo market. So the Fed has to jump in. And the reason the Fed has to jump in, I don't think it's because of a recession. I don't think it's because the banks aren't adequately capitalized. It's because the Fed needs to keep that short-term interest rate, the target interest rate, where they want it to be, not where the market wants it to be. And it's confusing because the banks are already tied to what the Fed wants. So it's not like the banks were operating in some free market on their own. All of a sudden the Fed jumped in. No, the Fed's already created the way the banks operate. And it's an unintended consequence of all of their interventions that we're now at this situation. So what it means is intervention begets intervention. And this is what the Fed has to do. Unfortunately, the Fed can do this. The Fed can prop up the repo market. They can just put money in, and all will be fine. But it's not fine because it's all is fine under the system they've created, which by definition involves having to do these types of things. So when people try to point to it as some type of significant event, it's not. It's actually what the Fed has to do because what the Fed does already and what the Fed has already done.
Now, can the Federal Reserve continue this activity and prolong this expansion to where, we hear about the world economy coming to a slowdown? Can they continue to pump in this liquidity to the banks, and then the banks, I guess, prolong this thing a little bit longer, or can they buy some more time with this liquidity that they're providing?
Well, what the repo does, it just provides the short-term liquidity. The bigger question is, on the longer-term basis, can they do it? And the answer is probably yes. They can then do what they've been talking about. This is just a stopgap for the short term, and clearly they've had the ability to do it. And if once you have the ECB, Bank of Japan, Bank of England, People's Bank of China, the Fed, then decide, well, the others are already buying assets, Swiss National Bank. If the Fed then decides in order to keep it going, we're going to have to start monetizing debt, meaning QE4, we're going to have to buy different assets. They've been looking at that. They said they'll have a proposal out early next year. So that's how they keep it going. But this little thing here, I call it a little thing. It doesn't mean anything. It just means this is what they do. This is the easy part. To keep things running on a short-term basis is simple. They just have to provide the liquidity. They don't have to really buy assets. These are loans. These aren't even, they're not taking the toxic assets off of anyone's balance sheets. Now, they'll eventually probably have to do that as part and parcel of their intervention. So I think this just is an indication of how sick this system is. But when people look at it in a vacuum and they try to analyze it, means something, and it just means the entire system is broken. This is a financial system issue, not an economic issue. However, as you know, they have tied the entire economic system, or Main Street, into Wall Street, into the entire financial system. So what you have is, and then Trump is trumpeting it, so to speak, that the economy is the stock market. And the stock market is largely a function not of the growth of the companies and the profit growth of the companies, but of the growth of the asset prices of the companies, which is a direct correlation to monetary policy, because the stock markets, doubled and tripled over the last 10 years. The profit rate, the growth rate of the companies hasn't done that. And that's what they have to keep doing, is pushing monetary and fiscal policy, bring the demand forward, and hope it all works out. They're never going to grow out of all this, so they have to keep, printing their way out. And the $64 trillion question, it used to be $64,000 question. We've got inflation, right, Mike? Is how long can they continue to do that before the economy just implodes upon itself? And I would have said in 2012 and 13 it'd be over by 2015 and 16. So they've shown incredible resilience and incredible ways of coming up with things like, and making them normal. Things like modern monetary theory, handing out money, buying assets, negative interest rates. That's where we are. So this repo, or I call it QEPO, is part and parcel of what they have to do.
Now, beyond the fact we're just talking about, the monetary and financial issues that we're talking about for our country, but we're also in the midst of a political situation as well that seems to be very problematic, because I think with this whole impeachment process that they're trying to implement, will this have any consequences perhaps on the market as far as confidence from the world looking at our internal problems on a political scale, you think?
I thought when Trump got elected, I didn't realize it would be this extreme and this intense, but I knew that they were out to get him. And I thought that, I called it Trump turmoil, would drive the markets down and gold and silver up. But so far, that hasn't been the case. And I think it's because the case against Trump, other than resign to those that are really against him, has not spread. Because if Trump was really in political danger, and the world just thought that this was the big mistake, that he never should have been elected president, he shouldn't have any business being near there, then the markets would be down, there would be no confidence. But right now, this impeachment, first of all, it's not an impeachment. They haven't even taken a vote on it. It's a paper tiger. And the counter to that is that Trump is playing it as a waste of time, ineffective. And, they're using sound bites saying that we can't remove the guy by voting him out of office, so we kind of have to impeach him. That just looks like political wrangling on both sides. It doesn't look like the same when we had Nixon. If you compare the two other impeachments in our time, and Nixon never was impeached, but Nixon had the misfortune of a bad economy, and he was going to get tossed out of office. And that did lower the confidence in the dollar. Nixon had taken the U.S. off the gold standard in 1971. 2 or 3 years later, they're looking to get rid of him for other reasons. So clearly that was bad for the economy. People lost faith in the dollar so much that the U.S. had to issue Swiss-denominated bonds, Carter bonds, in the late 70s. Now, if you fast forward to Bill Clinton, they tried to impeach him, didn't get that far, probably got further than Trump's will, at least from what we know now, because Clinton actually had done some things wrong. And still the economy was, you're in the middle of the dot-com boom, and the stock market did well during that time period. So I think it's kind of a hybrid. I think with Trump, he hasn't done what Clinton has done. If the economy goes into a recession, that may cause people to lose faith in the U.S. But the rest of the world is already in a quasi-recession, if not a full-blown one. So I think absent any type of bombshell, and they come every 2 weeks against Trump, these so-called bombshells. I don't think he's going to get removed. If he gets reelected, I think that changes the whole dynamic again in 2020.
Now, amongst this whole election process is coming up, he's also very boisterous in regards to letting his feelings be known against Jerome Powell and their policies, and calling them boneheads and all types of words that he uses to describe our central bank head and staff. And so a strong dollar, I think just recently is a tweet about the dollar being strong again, and we need to outdo everyone else as far as racing to the bottom. So in your opinion, moving forward, this monetary policy and what Trump wants, will he get what he wants, and what will that look like if Trump gets what he wants as far as the Federal Reserve responding and actually doing what he wants them to do?
What's quite ironic is Donald Trump making this big rage against the Fed is actually drawing attention to the Fed as to the American public. What is the Fed? And one thing that's clear that the Fed is, that I think most people don't understand, is that the Fed is not a branch of the government. That's the first start in getting people to understand the Fed. A lot of people think, I've heard snarky comments, if Trump doesn't understand separation of powers. Like, hell he doesn't. That's what people don't understand. The Fed is not a part of the government. The Fed is the only central bank in the world that is not part of the government. It's not part of the Treasury. They don't coordinate monetary policy with the government. They're off on their own independent. Now, the bad side to that is Trump is also highlighting why an independent Fed might be a good thing, because if you give the central bank to the Treasury, the people in charge of it are always going to pursue a very loose monetary policy. You hear what Trump is saying? I want to get reelected. I want the economy to be stronger. We should be paying lower rates. We should be paying the lowest rates, which means negative rates of anyone on earth. And we should be able to do QE. The rest of the world is doing it. So you can see how politically, if the country controlled a central bank, it would use it as its own printing press. Now, then that leads to the issue is, should we even have a central bank at all? So the good thing about Trump being in office and attacking the Fed, while it may not be good and it may undermine the Fed, maybe, as Bernie Sanders says, that's a good thing. Because if it raises people, this is one way that people might understand what's happening, that the Fed is responsible, monetary policy is responsible. But the flip side is what Trump wants to do is be even more irresponsible than the Fed is already. He wants to print money and to go to negative rates.
President Trump has to be aware of the consequences for these actions that are in place now with the quantitative easing and lowering rates and all the things that has brought us to this point in history. And so, in your opinion, what is his long-term thoughts or plan? I would assume he himself will not be severely impacted by policies the way that the general public will be. What, in your opinion, what is his long-term agenda?
I think what you hit the nail on the head inadvertently when you said he has to know that this isn't good long-term. It's the same. He's drunk on power. He wants to preside over a roaring economy. He doesn't care what happens later. And it's a person who's got a problem with the drink knows full well that drinking a bottle of whiskey before breakfast is not a good thing, but does it anyway. So I think he's in the position that he figures if everybody else is partying, all the other central banks are partying, what good is it to stand alone and watch the party when he views the United States as supposed to be in charge of the whole economic party? Now, the real prudent thing would be to do which is not going to happen because he would cause a recession in the U.S. and a depression in the U.S., is to lecture the rest of the world, instruct the central bank to be prudent, raise interest rates, slash the debt, raise tax, all those types of things that, or just cut massive government spending so they wouldn't have to raise taxes. But he'd get thrown out of office if he did that. Think of all the government workers he'd have to fire that wouldn't vote for him. I mean, and it would cause a recession. Now, that you may say that ultimately would lead to a cleansing of the system. You and I talked about this a few years ago. That's what has to happen. They have to cleanse the debt out of the system. And that's what Trump kind of was saying before he became president. But once you get into power and you realize the easiest way to stay in power is to use all the levers of power, which means just spending more money and promising more stuff, that's what you do.
Unfortunately, that along with all this stuff, the majority of the public, really don't truly understand and have a clue as to what's going on.
Yeah.
Savings, investing, and all the conventional financial matters that we were all taught. You go to school, you invest, you save, and contribute to your savings vehicles, and look forward to having an enjoyable retirement. All those things are being threatened by these mere policies we're facing.
Correct.
So. Solutions. We know the problems. You gave us a good outline of the problem. Solutions. What are some ways that people can really begin protecting and taking advantage of opportunities that present themselves amongst all this chaos?
Well, and this isn't financial advice, but one of the things that I've learned over the last 10 years is, and it's a cliche, is don't fight the Fed. Now, you may say, well, we see all this logically. It doesn't make any sense. We should retreat to our bunkers. But in a way, riding the wave, while it sounds like heresy, is if you know the central bank is going to print money and inflate assets, you might want to have a toe in that water. In other words, protect yourself against their own profligacy, get your gold and silver and save your cash and buy hard assets. But it may not be a bad idea, and again, not financial advice, is if they're purposely trying to boost the prices of assets and they're, in a sense, giving away free asset value, it's there for the taking, and it depends on how much you're comfortable risking that, but that may be a lower risk if you know that the Fed is going to do these things. I mean, I remember Peter Schiff saying, this is what the Fed is going to do. And then they did it, and then it drove asset prices up. If you know that's going to happen, then maybe you should be in that game. I'm not suggesting that anyone do that. It's just that has been a good strategy if you don't care about, if you're just trying to, feather your own nest. That's been a good strategy, and then you could take the profits and put them into harder assets. You would have more money to buy hard assets if you had participated in the Ponzi scheme.
Right.
And again, I'm not advocating. I'm just saying that if you look at what's happened, people have done well participating in it, and you can have your ethical issues with it, but the people have made large fiat profits by going along with this.
So riding the wave all the way until this thing, I guess.
But not all in. But not all in. That's the difference. You don't want to ride the wave all in, and then that's stupidity.
Yeah.
Because when it crashes, you don't want to be on the wave. You don't want to ride the wave until it crashes on the beach.
Right. Right. Very good point there. Well, Louis Cammarosano, it's been great to have you here on Silver Doctors. I think you did a great job of painting a very informative picture as to what's going on and how people can, I guess, strategize and utilize some of this stuff, to their advantage according to their comfortability with this whole situation here. So once again, Louis Cammarosano, thank you for joining us here on Silver Doctor. Any last thoughts you want to leave us with? And of course, I'll link your information down below, but any last thoughts you want to leave us with?
No, I just want to thank you and all the fine work you've been doing. And if you want to check out Smallgold, check out Smallgold. We do a live stream every night, and we talk about issues like gold, silver, cryptocurrencies, and the economy. So thank you very much for having me on again today.
Yes. Well, Louis, once again, it's been great having you. Look forward to continue to stay in touch with you and definitely have you on down the line in a couple months and see where we're at that point and get your thoughts on what's going on.
Excellent.